All right, let's get right into it. There's a big question floating around that's probably on your mind too. Is HMRC gearing up for a brand new tax rate? And honestly, the short answer seems to be yes. There are a lot of signs pointing to some pretty major shifts coming to the UK tax system.
So, let's unpack all of this. This whole discussion has been put together by the experts over at My Tax Accountant. Their goal is to help you get your head around what's actually on the table, why this is all happening now, and this is the crucial part, what you can actually do to get ready for what's coming.
So you might be wondering, why now? Why this sudden just explosion of tax ideas being talked about in the news? It really feels like every single day there's a new headline about our homes, our savings, even our businesses. So what's really going on here? What's the driving force?
Well, the answer, when you boil it all down, comes down to this number, £50 billion. That's the size of the potential budget shortfall the government is staring down. And look, when you've got a hole that big, you've really only got two choices. You can cut spending, which is always a political nightmare, or you have to find new ways to bring in more money.
And that leads to this strategy that political insiders call kite flying. Basically, the Treasury quietly leaks these ideas to the media just to see how we, the public, react. It's like they're sending up a kite to see which way the wind is blowing. And right now, believe me, they are flying a lot of different kites. And every single one of them could affect your wallet. So let's start with the first big target area.
Okay, let's dig into the details. The first big area in the crosshairs is property. And this is a huge one, right? Because it affects millions and millions of us all over the country, whether you've got your family home or maybe a couple of rental properties.
Now this is where it gets really interesting, because what they're proposing is a massive shift in how we tax homes. Right now, we've got council tax, which is kind of crazy because it's based on what your house was worth way back in the 90s. And then there's stamp duty, which you only pay when you buy. The new idea? Scrap all that and bring in an annual property tax, a tax you'd pay every single year based on your home's current value.
So what does that actually look like in pounds and pence? Well, let's say you have a home valued at £1.5 million. Under this new system, you could be looking at an annual tax bill of £9,500 every single year. Suddenly, this isn't just a political debate, is it? It becomes a very, very real number in your household budget.
And this really gets to the heart of the problem for any government trying to push this through. As the political analyst James Frayne points out, the whole idea of an Englishman's home being his castle, well, it's a cliche for a reason. There's this really deep-seated belief that your family home should be off-limits, so slapping an annual tax on it, for a lot of people, that's just a bridge too far.
But wait, there's more. The attack on property doesn't stop there. A few other kites are in the air. One is hitting you with capital gains tax when you sell your main home, if it's valued over $1.5 million. One commentator literally called this a monstrous act of confiscation. And if you're a landlord, get ready. There's talk of adding national insurance on top of your rental income, because, let's face it, landlords are often seen as an easy win for HMRC.
All right, moving on from property, let's talk about the wealth you're hoping to leave behind for your family. The spotlight is now swinging towards our long-term savings, things like family businesses and, yes, even our pensions.
Okay, this is a big one. For decades, there's been this amazing relief for family farms and businesses that let them be passed down without a massive inheritance tax bill. It's called Business and Agricultural Property Relief. Well, the plan is to change that. Starting in April 2026, that 100% relief is gone. It's being replaced with a £1 million cap. Anything over that, it's going to get taxed.
And guess what? People aren't waiting around. Business owners are already reacting. Take John Spencer, for example. He's saying he can't even make major investment decisions anymore without thinking about this tax hit. He's actually started giving away assets to his sons right now before the rules change. So you see, this isn't some far-off problem. It's changing how people run their businesses today.
And then there are our pensions, another huge target. See, since 2015, we've all been saving into our pensions, thinking that whatever's left over can be passed on to our families, free of inheritance tax. Well, the government is now planning to pull those pension pots right back into the IHT net. And what's really cheeky about this is that it's a retroactive change. They're changing the rules on money we've already saved, thinking we knew what the deal was.
And the impact? Well, as you can see, it is absolutely staggering. When you add the proposed 40% inheritance tax to the income tax your family might also have to pay, the total tax HMRC could take from that pension pot could be as high as 90%. No wonder some experts are calling this state confiscation. It means for every pound you painstakingly saved, your loved ones could end up with just 10p.
So we've talked about property, we've talked about savings, but that's not all. HMRC is also getting much smarter about how it looks at your income. It's not just about what you own anymore, it's about every single penny you earn from every possible source.
Yeah, the days of random spot checks are long gone. HMRC has gone high-tech. Their whole strategy is now systematic and data-driven. They are actively pulling in information from all over the place, connecting the dots to find what they think is undeclared income.
And how are they doing it? Simple. Data. Massive amounts of it. They're getting sales data from places like eBay and Amazon. They see your bank records, info from letting agents, and pretty soon they'll be getting data from crypto exchanges too. They take all of this, match it up with your national insurance number, and boom, they've built a pretty detailed financial picture of you.
And to crunch all this data and chase people down, they've just hired 400 new compliance officers. And who do you think they're going after? It's usually not the giant corporations with armies of lawyers. Nope, it's ordinary people. You know, the side hustlers, the small business owners, the landlords. From HMRC's point of view, they're often seen as the low-hanging fruit.
Okay, after hearing all that, you're probably thinking, what on earth can I do about this? And I get it, it sounds pretty overwhelming, but here's the thing. You are not powerless. So let's switch gears from all the problems to what you can practically do to prepare.
Look, the big takeaway here is that preparation is absolutely everything. So number one, get your records in order. Seriously, make sure every single transaction is accounted for, preferably with some decent accounting software. Number two, take a hard look at how you're structured. Are you taking director's loans from your company? Got some rental income you haven't declared? It is so much better to fix these things yourself proactively. And third, and this is probably the most important thing, get some professional advice, and get it now.
You see, HMRC's first move is usually something they call a nudge letter. It looks like a polite little note, but trust me, it's the start of an investigation. The last thing you want is to be frantically digging through shoeboxes for receipts after one of those drops through your letterbox. The time to get ready is now, before they even think about knocking on your door.
The bottom line is this: the tax world is changing fast, and HMRC's way of doing things is getting a lot more sophisticated. Trying to navigate all this on your own is tough. You really need expert guidance. For a professional team that really understands HMRC's new playbook and can help you get your affairs structured properly and legally, you can get in touch with the team at My Tax Accountant. In this new environment, it's not really a question of if change is coming. The real question is, will you be ready when it arrives? Thanks for your time.